In some other news, the U.S. probe into suspected tax evaders has widened here to Hong Kong. The Wall Street Journal cited court documents of plea bargains with clients of Swiss bank UBS, and the investigation suggests a pattern of using offshore entities in locations such as Hong Kong. Let's get more to and talk about this regulatory change and also implications for investors here in Asia and also for the companies abroad. We have Brian Poley, director of CQS, which is a hedge fund manager that oversees more than $5 billion of assets globally. And just to mention that CQS's two Asia funds are up 24% and 17% respectively on the year so far. Has it been a good year so far for you, Brian?
Our returns have been sensible in terms of the 24% in Asia. We have one Asia fund in the CQS, the global fund.
Yeah, congratulations on that. Let's talk about the regulatory changes, though. This news about UBS. I mean, it seems to make a lot of funds operating here in Hong Kong a little shaky.
The regulatory environment is going to change. Regulatory changes are here to stay. There's nothing you can do about that. You need to have a strong operational platform. You need to have a strong compliance background, and it's going to create barriers to entry. I don't really have a lot of information about what the UBS situation is other than what I've read in the papers and obviously heard on Bloomberg. Mm-hmm. But from the institutional alternative investment space, there's definitely going to be regulatory changes, especially in a region like Asia where you have so many diverse markets. You have a number of different currencies. And you don't have a homogeneous regulatory environment like you do in the U.S. Mm-hmm. So the private bank sector, I guess, with the UBS situation will be, somewhat concerned. As an alternative asset manager, we're always concerned with regulations. As a matter of fact, our chairman, Michael Hinsey, is on the was in the hedge fund working group, and he's a trustee on the hedge fund board of standards. Mm-hmm. So we've always tried to stay on the front foot of regulatory environment. Well,
thanks for the plug for Bloomberg Television. I didn't know you were an avid watcher. But let's talk about, regulation, especially as you operate a hedge fund, which is an alternative investment vehicle. And it's come under a lot of scrutiny, especially after the Bernie Madoff scandal.
That's correct.
Yeah. So what about these new regulations? Has it handcuffed you in terms of operations at all? Especially, you hear about these new changes that they want to put in the U.S.
No, as far as we're concerned, it's actually helped because, as I said, we've embraced these regulatory changes. What you need to keep in mind is that you need to have a strong, as I mentioned earlier, strong organizational process mm-hmm. and good corporate governance. And as long as you have those in place, you shouldn't be too concerned about the regulatory environment. Mm-hmm. And what that means is, independent administrators, independent custodians, independent legal, accounting, all the things that Bernie Madoff didn't have, basically. Right. So as long as you can keep those separation of church and state, right. or keep a separation of your operational integrity and your investment process solid.
But how can you govern corporate governance within hedge funds, which don't have to answer to anybody, really?
Well, effectively, you do. You still have to. For example, in the SFC here in Hong Kong, you still have to have audited financials. You still need to post your returns. You still need to do a lot of the stock loan and follow the short selling rules in various jurisdictions. So there's still a number of eyes on alternative investment managers, even though they are private pools of money.
Yeah. Well, we're going to have a report coming up to tell us which sectors that hedge funds are buying into these days. But CQS is operating a little differently this year. Instead of equities, you're focusing more on convertible bonds. Why does that, I guess, present more opportunity and risk-reward for you?
Convertibles have always been a strong suit for CQS. It's always been one of their comparative advantages. At the end of 2008, CBs were sold down quite heavily in the markets, and we thought there was going to be a very strong, or we thought there would be an uplift in CBs going into 2009. Fortunately, we've caught part of that uplift, and CBs offer a good way of playing the market because they are sensitive to equities and they also have a debt component. So if you have a solid research department and you do your due diligence with the experienced investment managers.
Okay, well, I guess the question is, after the performance of 2008, why should people invest in hedge funds? Aren't you supposed to make money in any environment? That didn't happen in 2008. Didn't you disappoint then?
Depends on how you look at it. From a comparative point of view, hedge funds as a whole probably did outperform many of the indices. When you're looking at an absolute return basis, alternative managers, you're right, should do better in down markets and should keep pace with up markets. I think what's coming back, though, is you have to remember the term hedge, right?
Right.
These are hedge funds. So what we try to do is produce sensible returns, at the same time make sure that we are good stewards of the money that we have under our management.
Okay, Brian, thank you for visiting today. Brian Poley of CQS.